Hello, traders. Gary Wagner with the Gold Forecast, 15th day of February, Tuesday, approximately 9:45 here in Honolulu, Hawaii, and this is the Daily Report. We did get that breakout that we were looking for. Gold currently trading up between $12 and $13 higher, currently at about 1374, 1375 bid-ask spread. Of course, I did issue a buy signal this morning. This is the video which follows that buy signal. Traders, as you know, what I was concerned with was the fact that we were butt up against this resistance area, and I felt that to get that breakout, we needed to break above that. We absolutely did that today. As you can see, we are far beyond that 1368. We're trading about $6 higher than that. My sentiment is right now that in terms of fundamentals, and you know I'm a technician, but I believe absolutely the fundamentals guide the market. We are developing a scenario of what I'll call a perfect storm. We had a budget announcement by the U.S. government, which gives us an additional, I think it was $3.7 trillion of debt in 2012. We have uprisings throughout the Middle East, and all of these factors together are creating a scenario in which I believe that gold could really be staged for a major move to the upside. Traders, here's what I'm looking at. Now that we've seen this potential breakout actually convert into an actual breakout, in terms of a strategy of where I think the market is going to go, we have our major resistance is going to be around $1,400, 1401. That's the 76% retracement of this last move up. That would be the first target that I'm looking at. But in terms of the big picture, I think that we're going to see the market over these next couple of months, one, go and test the contract and record highs, 1431. Two, break and exceed those particular numbers, and I think that we're going to see some amazing numbers happen in gold. I think that one of the bigger waves in terms of our Elliott wave is right around the corner. As I said, that perfect storm is brewing at this point on a fundamental basis, and I think that right now gold is absolutely poised for a major move to the upside. Traders, of course, we are looking at a weekly chart. This is in Henkin or average format, in which I am looking at channel lines to plot basic directions of where I think the market could go. The one thing that I'm noticing from this right now is that we are poised, I believe, as I said, for a major move to the upside. As we look at this chart here, my sentiment right now is that if it simply follows this channel line up right in here, the first real move is going to be a retesting of that contract high. That's at 1431 right in this area. I think that in terms of resistance, we're going to have to see the kind of tact or what I call amplitude angle, the rate in which the market moves up. But if we take a look at historical evidence in what we have seen in the market, I think you're going to find something for us gold bulls that proves fairly interesting. If we take a look at some of these rallies that we've had, once you develop a couple of candles, and realize that you could have gotten fooled right in here, but once you have a couple of candles develop on Henkin on weekly charts, if we have truly entered a truly defined uptrend in the market, as you can see here, there is a likelihood, and I repeat, a likelihood that we could be in for a rather nice long ride, because the trends in the gold market have been sustained, and they have been such that when you do see them, it really allows us the ability to capture a market move and ride it for a period of time. And I think that that is something that is worth noting. Now, I have taken the same chart, I've simply converted our Henkin chart into a candlestick chart so we get an idea of what we have been looking at on a weekly basis. And as you can see on a weekly basis, we did have this beautiful bottom. This is that 1308. we have had a series. They are small bodied weekly candles. In other words, the move has been small, but here on Tuesday, you can see that we are starting to extend that range. Most importantly, in terms of that range, is the fact that we have exceeded what I consider to be a pretty strong resistance area that it needed to get over. As you can see, these bottoms right in here, that was part and parcel of this resistance area right in here, and we have in fact now breached that, and therefore our recommendation to enter the market from the long side. In other words, traders, you should have already put a position on entering the market from the long side, and in terms of stops, 1335 to start it. I want to keep it low. If we do get any kind of a dip back down, we have support at 65, again at 50. I'll look to dollar cost average, because my belief right now is that we are probably starting, as I said before, a major rally to the upside. Traders, the last chart of the day. This is a 2-day candlestick chart. Each candlestick represents 2 days of trading. It condenses obviously a little bit more than a daily, not as much as a weekly, so it gives us a more compressed view of the market. And I thought that we would leave it in that so that we can see over the last couple of days just what kind of bullish move we have. Of course, this is engulfing bullish that we have. We would have to see confirmation, but it is quite clear to me that this trend, now that it has broken above this resistance point that I felt was critical, I believe is now going to develop into a full-blown rally. Now, as I said, we could get a couple of dips. We could see it go to maybe 80 and then dip back down. If we do see that, I want to take advantage of that and use that as a dollar cost average to add positions. In terms of my basic target, where I think the market's going to go, I'm looking at 1396 to 1400. That's the next, what I'll call, major resistance area. And then from there, of course, we have to battle, if and when we get there, I should say, we have to battle this triple top to create new record highs. If, in fact, this perfect storm does develop, I think that we do have the opportunity to see the market trade and surpass that. And in terms of where I think it could go on the upside, those are some of the topics we'll be covering this week in the Daily Report. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Daily Review. Bye-bye.